Well, earmarked taxes are taxes that are specifically created or dedicated to a particular purpose or program. This means that in creating the taxes, the legislature or government links to the usage or links the usage of these taxes to specific projects or institutions. Yes, Nigeria has had various earmarked taxes over the years, and this includes education tax, now the tertiary education trusts or fund tax, which amounts to 2% of accessible profits, tax deductible for companies subject to petroleum profit tax, Niger Delta Development Commission NDDC levy created by the NDDC Establishment Act, and is imposed at 3% of total annual budgets of any oil-producing company operating onshore and offshore in the Niger Delta areas. Well, there are also concerns that earmarked taxes are staging a comeback into the Nigerian tax system, given the introduction of the electronic money transfer levy and unclaimed funds trust, trust funds in the Finance Act 2020, which, though not earmarked taxes themselves, indicate that government is willing to create new taxes or levies to raise revenues. Very quickly, I have joining me via Skype to look at this is an Associate Director, Tax Advisory Regulatory Group in Anderson, Nigeria, Mr. Michael Ango. Thank you very much for your time, Mr. Ango.
Thank you, and welcome to have you on the show. You've demoted me. I'm actually a partner. I'm no more an associate director.
I'm sure there must have been a mix-up somewhere, then I apologize. Partner Advisory Regulatory Group, right? Is that correct? Anderson, Nigeria.
Apology accepted.
Thank you so very much for that. Now, very quickly, earmarked taxes. I was wondering when I was reading and looking through this, why do we have to earmark taxes in the first place? It's confusing me from the regular taxation policy that we regularly talk about. Take us through what this means.
Okay, I think the earmarked taxes are actually historical. So what happened was during the military regime, I think when there was less focus on, the usual taxes, company income taxes. Of course, that time we didn't even have the value-added tax, as it were. What we had was sales tax. So there was, drop in tax revenue, as it were. And so government looked to find revenue for specific projects or specific institutions. And that gave rise to the whole idea of, okay, why don't you create a specific class of tax for, whether it is for, education trust fund, as the tertiary education trust fund was previously named. You have the example of the Niger Delta Development Commission, which came on stream, I think, in the early 2000s. So it's actually a concept whereby you go to find funds or funding for a specific project or institution. Usually, earmarked taxes are not supposed to be perpetual. So they are supposed to have a lifespan, maybe 5 years, 10 years, as it were. But here in Nigeria, what our experience is that, we have earmarked taxes on our books, and they do not have any, time period within which after they will lapse. I mean, there's nothing wrong in having earmarked taxes because they can be useful to the extent that they are used for the purpose that they are created. So, for example, you have, poor infrastructure, maybe roads or bridges, and then you want to fix them. Then you can charge a specific tax and you dedicate it to fixing that particular infrastructure deficit. Is that over time, what we have seen is that whenever any government agency is looking for revenue, they then quickly create, another tax type, which they then appropriate for themselves. And so that's really one of the major dangers of having earmarked taxes. Again, we had a national tax policy, or we have a national tax policy that specifically said that one of the things that should happen in the Nigerian tax system is that over time we should streamline our taxes. And in fact, the major prescription in that regard is to do away with earmarked taxes. But what we've seen recently is that government is willing to create new taxes, specific taxes, just like we have with the electronic money transfer levy, rather than, of course, continue to collect stamp duty as it were under the previous arrangement. And so these are some of the concerns that people are saying, look, is there a new wave of earmarked taxes that we're going to see, especially as we know that, oil prices have either continued to go downwards or they've not risen in the manner that we expected they would rise post-COVID. So these are some of the concerns. But just like I said earlier, there's nothing really wrong with having earmarked taxes. The only thing is that you need to be careful how you apply them and, of course, how they impact your businesses.
Looking at this also, it shows that effective taxing and pricing leads to what unbalanced budget for earmarked funds. Looking at all of this, when government and legislature come together and this is put up, what about implementation? Before now, like you said, is historic. How has it been with getting funds from earmarked? Has it really been channeled to actualizing what it is really meant for?
Well, I think it's a mixed bag. If you take the tertiary education tax, for example, I think it's largely been a success because we see that the funds have been collected, there have been intervention in our institutions. Previously, it was across board, but then since 2014 or so, when they did the amendment, it's been for tertiary education. And if you go to Nigerian universities today, if you go to the polytechnics, you would see projects that have been carried out by the Tertiary Education Trust Fund. So yes, it's been successful to that extent. However, if you look at the Niger Delta Development Commission example, then you may say that it hasn't been quite successful. The NITDA levy is another example. That's the National Information Technology Development Agency. That has been a bit of a success to the extent that, the organization, the agency came on stream in 2007, and in a decade and a few years, NITDA has become one of the most prominent agencies in Nigeria, riding on the back of the NITDA levy, which is charged at 2% of the accessible profits of companies. So in that to that extent, you will say that it's been successful in some areas and not quite successful in some. But the major challenge, or one of the challenges again, is that when you then begin to depend on earmarked taxes, it can lead you to neglect your usual taxes. And then, of course, there's always the issue of multiplicity of taxes. So how far do you go? How often do you begin to continue to introduce these taxes when you already have, your existing taxes? Let me use an analogy. So what happens with earmarked taxes is that you have a cake. You're a baker and you have a cake, and there's so many people to share in that cake. But then somebody who doesn't want to wait in queue then says, look, I'll join the queue and then bake my own cake. But the challenge with that is that you're still baking from the same ingredients that the initial baker had. So what I mean is that if we were to get a pool of taxes into our Company Income Tax Act account, or the value-added tax account, as it were, then you have people withdrawing from that pool into smaller pools. For example, the Police Special Trust Fund, which was created in 2019. Then ultimately, it will then impact, of course, what you get for the general purse. And I think, apart from the federal government, state governments should also be interested in some of these earmarked taxes which are introduced at the federal level, because at the end of the day, they are all taken from the same tax base, which is basically the profits of companies operating in Nigeria. And so ultimately what you have, especially in instances where some of these taxes are tax deductible, then you will, of course, impact what comes to the bigger and larger pool for sharing. And most of these earmarked taxes are usually, at the federal level. I'm not saying that the federal government cannot, in deserving cases, of course, create these taxes so that they can meet a particular need. After all, at the end of the day, it will be for the benefit of all Nigerians. But I'm also saying that, we have to keep an eye, we have to watch it closely. I think so. My answer to your question really is that there's no right or wrong answer in terms of how you can say earmarked taxes are used. At the end of the day, what is important is the implementation. And as we've seen, in some instances, we've gotten it correctly, and in some instances, we haven't quite gotten it right.
All right, very good one there. Now, we touch a little bit on the Finance Act. It's Finance Bill 2020. And many say that it aligns with best practices. That's when you talk about moving your budgetary allocation or your budgets with a Finance Act that's looking for ways to fund this budget, particularly with a country like Nigeria that we have challenges with revenue at this time. But What would you say is your assessment as a practitioner? How well are we faring? I think we started last year, and we have another for this year. What's your assessment? Is this really helping us shore up this revenue as much as we expect?
Well, first and foremost, let me say that the concept of the Finance Act is a very excellent one. Prior to 2019, we hadn't had a Finance Act or decree, as it were, in Nigeria since 1996. So it was a very excellent initiative. And in terms of helping to fund the budget, I think what the Finance Act typically does is that it looks at areas where you feel that either your laws are not strong enough, or there has been some new development in the economy that wasn't captured previously. And then you create certain tax laws, or you create certain laws or provisions of your laws, as it were, to then capture those areas where you feel that you can get revenue. So I think to that extent, we got it right in 2019. In 2020, we then saw the Finance Act expanding its scope. In this regard, two of the major issues with respect to, of course, funding the budget that people have commented about in the Finance Act 2020 is the creation of the Electronic Money Transfer Levy and, of course, the Unclaimed Funds Trust Fund. And to that extent, it then began, questions were raised as to what the whole essence of the Finance Act is. Is it just, a yearly annual ritual that we do, or is it something that is supposed to be targeted? If you ask me, I will say that yes, given what we've seen in the last 1 year, nobody could have planned for COVID. Nobody could have planned for the steep drop in oil prices. To that extent, government was entitled, or at least government had the duty to look for where it could get revenue. The issue then is that in getting revenue, government also has to be mindful of the fact that taxpayers, want some certainty. They want some stability in terms of what their obligations are. So if you have a situation where annually you are either introducing new taxes, you're making changes to your tax rules, significant changes to tax rules, then it begins to create doubts in the minds of taxpayers as to what what the obligations are and how to respond to them. But in terms of funding the budget, I expect that for the finance bill, maybe 2021, there will be a more circumspect approach in terms of saying, look, rather than introduce any new taxes or new levies, as it were, we should sit down and see what we have, how far have we implemented them since the 2019 Act, and then make any improvements that may be necessary to ensure that we're able to get what we need. I don't think that Nigeria needs new taxes. I think that we have sufficient taxes on our books. But again, the economy is dynamic. Things can change in a minute. A whole new area of the economy can open up that was not previously contemplated. As we saw with COVID, we had the digital economy blew up. People were sitting at home and transacting businesses in hundreds of millions of naira or billions. And so, of course, government then looked at it and said, look, we needed to make sure that we're able to tax the digital economy sufficiently. So to that extent, government, of course, also has a duty to look at those areas. But I would, sound a word of caution to say that let us also sit back sometimes and slow down, because changes that come too quickly might either be resisted or they might not, be implemented properly.
All right, let's now almost wrapping up now, talking about how we can improve if it's tax to GDP ratio or our tax, expand the tax net. There's always this argument of the formal and informal sector. We need to bring all of them into the tax net. Can you also make us understand what this means?
Well, interestingly, I was at the retreat of the Federal Land Revenue Service last week, and this issue came up for discussion. And I think the key issue is what really is informal or what is not formal. I think sometimes we dwell too much in terms of labeling. What is important for taxation is not whether you're in the informal or informal sector. What is important is that you pay your fair share of taxes. But again, yes, the idea of having somebody have a proper business with records and all of that, which I think is what we refer to when we talk about the formal sector, is important. But we also recognize that given the nature of our economy, a large number of businesses will always continue to remain informal. What is important as tax practitioners and as tax authorities is to see how we can then get those people that we call informal sector to understand what their obligations are under our tax laws, and then to pay their fair share of taxes. You may never be able to formalize a vulcanizer's business to the extent that you don't have proper accounts, vouchers and all of that, but you can assist him to understand that he needs to have some. He needs to understand, if he makes expenses, he needs to account for them and all of that. So that also brings me to the issue of taxpayer education. I think we need to invest heavily in education so that don't always assume that when people don't pay taxes, it is because they want to evade taxes. Sometimes it's because they don't even know what they should do. And I know that a number of state governments, you can use Lagos State, for example, I think State, Kaduna State, they've made some significant progress in that regard. Kaduna State in particular is one of the major success stories of the last 5 or so years, where they've increased tax revenue or tripled their internally generated revenue. So I think what needs to happen is that in terms of ensuring that we're able to increase our tax to GDP ratio, it's really to make sure that whether people are informal or they're formal, they pay their fair share of taxes. And then, of course, the tax authorities are able to meet with them, explain what their obligations are. Ease of paying taxes is also very, very important. If people can pay taxes from their laptops, from their mobile phones, and all of that, it will help them easier rather than having to go to a tax office or, having to go to the bank and all of that. So there's a lot of work to be done. I know it's an ambitious target we've set for ourselves, but it is a target that I believe is doable. The FIRS have said they want to collect, I think, about 7 or 8 trillion this year. It's very doable. I think under the leadership of the new executive chairman, they are putting in a lot of effort, and I've interacted with them closely, and I believe that they can do it. But it's a collective effort for all of us. It's not just for the FIRS, it's for you, and I want to commend you for doing your own bit. You're always bringing taxation to the fore. So I'm sure if you continue and FIRS collects 8 trillion, they'll probably send you a check for some of the good work you're doing for them.
Because we're going to go follow up all of this and see how it plays out, particularly this revenue issue, and taxation remains key for government. Partner, tax, advisory and regulatory group, Anderson, Nigeria, Mr. Michael Ango. I thank you so much again. I appreciate your time.
Thank you. It's always a pleasure speaking with you.
All right.